our report, I got into, I was defeated by COVID, okay, for a couple of days. And just amazed how these webinars are getting tractions. People do come over to see what's going on. Before I start, folks, and I kind of want to briefly just lead you to the W-2 part of it. And today's focus is on W-2. We talk nothing else and just W-2 and explain each boxes for you. So if you are an employee receiving W-2 from your employer, I hope this section will make you feel like, oh yeah, that's what that is. But if you are not, if you are an employer issuing W-2 to employee, and then that will give you that fundamentals, and so you can work with your CPAs, work with your payroll processors to get the W-2 processed properly. You know that due date is January the 31st, right? With that, I want to say that our webinar is a free place for knowledge for free, so we don't take responsibilities. Our corporate attorney had mentioned to me a million times, always say that you got to say that, because it's not like you're not human, you never make a mistake. When you make mistake, people elaborate your mistake and becoming bigger mistake, and the bigger mistake become gigantic mistake, then pretty soon you find yourself in multi-billion-dollar lawsuit. So just try not to do that to yourself, by always be clear. This is a free service, free webinar, and we don't take any responsibility for the content we provide to the folks. So today, I actually want to share screen with you so we can go to our webinar content, which is the PowerPoint that I prepared for everybody. Let me just quickly share that with you. So this is our webinar, Understanding W-2, and this is the one, this is the page I want to show you. So we are going to focus on this form, and you know what this form is, right? So you're so familiar with it. It's like you're gonna say that, Ying, I can't even believe that you can come up with some talk on this form. Let me tell you, there's so much knowledge in here. I will just nitpick on what I know so that I can share with you. First of all, if you're an employer and you know that W-2 is not the only way you pay people, you can pay people through 1099 NEC or 1099 other form, right? So these other forms don't have the same tax implementations like W-2. So first of all, before your employer, you hire people to work for you, first of all, you need to be really clear, who are your employees and who are your subcontractors. So if they are your subcontractors, they don't get W-2, they get 1099, okay? Then obviously there is a huge topic and a huge implementation, understanding, interpretation related to the difference between W-2 and 1099. And we're not going there today, but W-2 is what the people you hire and you also are paying a workers' comp for. So these are the people who are tying the knot with you, okay? Your company benefit and everything you need to think for them, your medical insurance. If you're over 50 employees, you're required to provide medical insurance for your employees, okay? And if you are just you, and you are a SCorp shareholder, but you only have yourself working for your SCorp, so you got that W-2. That's correct. If you have S corporation, you should have someone working in the S corporation, especially if you made money, right? It is definitely not recommended running a very profitable S corporation and you turn around and goes, I don't even know what that is. Then that will be a very problematic way, problematic for you to get into very hot water, okay? People, the government who cares about employee are the Department of Labor and the unemployment insurance company, agencies that managed by the state. These are two governmental entities that just really care about how you treat your worker. Of course, IRS also care because IRS is here administrate those taxes you pay to those employees. All right. So now let's look at these boxes. So I'm going through these boxes to explain to you what weird stuff can happen in here. Okay. And now, if you are an employer and you run your payroll, at the end of the year, you need to issue this one. Other than this one, you also have W-3 to issue. Am I right? That due date is January the 31st. And when you issue that, I hope your process is to have yourself going through your quarter one, quarter two, quarter three, quarter four, 941 report, and reconcile that 941 report to this summary total. And if you don't know what I mean by reconcile, and that is definitely a step you need to be aware. You need to be aware you need to do. Okay. So that step for reconcile is actually will add up all your gross payroll, all your box 1, and add up the number for box 2, and also knows the box 4 and 6. So all of these numbers will reconcile to your 941. And if you have this form different from what reported on 941, you will receive a letter from Social Security Administration because they're the one cares, wondering why you got a different number. Why are you giving me a different wages, different Social Security, Medicare? So whole bunch of issues would come up. So reconciling 941, then come up with W-2. So your box number 1, what is box number 1? Box number 1 is all those, when you receive a job, if you're an employee, you got a job, you got an offer letter. So on the offer letter, it says that you're paid $50,000 a year. On this total, that should really equal to your offer letter. Your offer letter says you're paid $100,000 a year. Then your wages, if there's nothing happens, that wages should equal. Okay. But of course, if you got tips, you got other bonuses, and that will change. And sometimes you put away for deferrals on 401k plan, self-deferral, of course, that number will change. Okay. So that number, if you don't do anything, it should be the number you got in the offer letter. But if you had done deferrals, and if you have received additional compensation like bonus, and that number will change. The tax withholding number, box number 2. And if I were you, and it's always important to check to see whether that withholding total is equals to all your pay stub you got from the whole time. You might say that, well, I never thought that would even be a possibility to have mistake. Normally not. But sometimes, just in case you screw up the system, and you realize that you didn't really, you're not even sure whether the tax was withheld or not, and it's a good precaution to take to add up all of your tax withheld numbers to make sure that equals to what you got in number 2. Sometimes, because when we file 941 to the government, there is no individual information on there. So the government don't really know, what tax withholding was allocated to which employee. The only allocation happens is when we produce these W-2. So the IRS has the total for 4 quarters already. And that 4 quarters total is going to be split perfectly between the people. And that split should be on your paycheck. So you want to verify that number 2. It is also important because the number 2 is the one you got a refund or you end up paying more. It is all determined by number 2. Okay, so this is the federal piece. Social Security wages. So Social Security wages is basically a wage amount that Social Security benefit is calculated on. So in 2021, the maximum Social Security benefit calculating on wages is $142,000. So that number, if you get paid for $200,000, you actually don't calculate Social Security benefit anymore because you got to the maximum. But the Medicare wages, that one, the number $5, and you think it is always the same. No, that one didn't have a limitation. If you have $200,000 W-2 income, and that Medicare wages will be 200 in there. And then Social Security wages is limited as maximum of 142 for 2021 form. So even if you make 500,000, you're gonna end up just having the 142 with change in the box number 3. So the box number 4, it is coordinating with box number 3. So that would be your Social Security tax withholding. So that tax withholding, it is your withholding. I think this is the 6.8% Social Security tax withholding. So you use that total, you times the rate, you will get there. Then of course, and you also have your Medicare tax withholding as well. That's a 2.4%. So you have your Medicare wages, you times that, and that will be the one withheld from your paycheck. And you know that whatever you were withheld, also the equivalent amount was coming out of the employer and to add into your benefits. So you don't just bring that portion to Social Security and that's your benefit calculation. No, it is actually double that. That's why Social Security Administration cares, and they want to make sure that the employer are reporting that, right? Because they're expecting to see that double, right? If it is not reported right, then they see the discrepancy, you will get that Social Security Administration's letter. Now, what about 7? What about 8? 7 and 8 are for restaurant employees. So the 7 are the tips the employee already included on your W-2. But there's the 8 is allocated tips. Those are the kind of tips that was allocated to you. And this part, and you actually the employer actually would not know. You are the one knowing how much you got the tips. So the 7 and 8, typically the 7 is filled in already because your employer already do. And the employees part, it is normally not reported. So the 8, a lot of times, majority of the times, is empty. Okay, it's up to you to report. The number 9, you will see the number 9. The number 9 box is kind of left blank. That is what they use. They used to have a function here, but they no longer use it, so they disabled it. So you don't have anything for number 9. And the number 10 is dependent care benefit that was treated in your W-2 form. What I mean by that is you could pay dependent care out of your payroll, right? Remember, you work with your employer and they have their benefit agency withholding your amount and pay that out to the agency. So when you are paying daycare costs, you would actually pay it out of that account, because that account, it is making it non-taxable. That's why it's listed here. So let's say if my box number 1 is $10,000, I made $10,000 salary, let's say wages, but I signed up to do $5,000 on childcare expense. So my box 1 will be 5,000 only, but my box 10 will be 5,000. Does that make sense? So this is the portion that you don't pay taxes. That's why it's sitting on number 10. All right. So the number 11 are non-qualified plans. Qualified plans are the plans that, like 401k are qualified plans, SEP-IRA are qualified plans. So those are the plans you can reduce that from your taxes. The number 11 is reserved, I would say, for the most well-doing companies developing non-qualified benefit plan for their executives. That's where the number 11 box would come in. So it will reduce their income. Part of their income become non-qualified plan dollar amount instead of box 1 to pay taxes. And 12A is very interesting because you would come through see different number on there. If you are an employee, I want you to understand your 12A, 12B, 12C, and 12D. Those are the ones you got the benefit, but did not show up for you to pay taxes on. For example, the portion of medical insurance premium that your employer paid for you, it will show up here to give you a total, tell you that how much you were paid but did not come out of your paycheck. So if you want to really calculate your overall benefit for working in a company, you would simply add your 12 box into your box 1, because that's really the total, not just because it's not part of your income, you don't pay taxes right now, doesn't mean you don't have that benefit, right? So that would be a 12A. Of course, for the company match for 401k will show up right here. All right, so box 13. Box 13 is an interesting one. And statutory employee, and those employees are typically sales associate. So for example, you are a life insurance salesperson, okay? You get commission, but that commission, you probably already noticed that it is actually a W-2. You're not getting it like a 1099. It came to you like W-2, but the only difference is that it has the 13 box checked. That check box, the 13 box, is very advantageous to you because you can deduct all your expenses related to that work. Like say, if you say, oh, I'm an accountant, can I just check my box on statutory employee? So I can deduct all of my expenses, the home internet, my computer I use, the pillow I sleep on because I was thinking about taxes, things like that. Then you can't because you are not statutory employee. And the accountant and other professions, so doesn't qualify for that. There's only small group of people qualify for statutory employee. People like the CFO, the executive directors of a nonprofit, and people like life insurance agent, people like the associate, the salesperson for printing company and things like, couple examples I know, and those are the people would check to be a statutory employee. Then retirement plan. Why is that important? If your employer offers employee retirement plan, and it will always check, even though you are here saying that, well, I choose not to participate, so I didn't really have it. But that doesn't matter. As long as you were offered, then it will be checked. But once it is checked, and you will be subject to the limitation. So when you go out to buy traditional IRA, other retirement deferrals, and you check this box, so you may not qualify to buy additional retirement. So my advice to employer is that if you offer retirement plan, that really should be a kind of plan that everyone qualifies. Because if you offer to people and you made it so hard for employee to qualify, then they would probably lose a lot more than just not taking your retirement. But for employee, and we say to you that if your employer offers retirement benefit, what's wrong with you? You don't want to take it. I wouldn't even understand why. I certainly don't understand why you would go outside to buy traditional IRAs, and here you have 401k retirement plan. Your employer even matches for you and you don't take it. So at Community CPA, we actually don't require our employee to put in anything. We match without match. We just do match, and we match 3% guaranteed. Then the rest of the percentage is on profit sharing. So it's like about 3 to 10% of range every year. But because we don't want our folks to end up not having that retirement plan, not having the chance to get retirement saved up, so we don't require any of our employee, to put in any dollar, and it's all company dollars. So with that, we check that box. So our employee get a W-2 with the box checked, and they cannot go out to buy other retirement products because they already have a plan. But of course, not all of our employees are at the stage where they want to put a lot of deferrals out. But it is important for you to put in deferrals. When I say put in deferrals, I mean that, let's say if your wages is 100,000, and you can literally put away in this year, in 2022, you can put away 20,200, I believe, is the total. You can put away that much into retirement, into your own retirement. That means your box number one, instead of being 100,000, is only 80,000. Does that make sense? So this is where we're talking about deferral. So you personally, you put money in there. Then of course the company also put money for you, regardless how much you put in. And so that will be the really the best way to save for retirement. The third box is third-party sick pay. The third-party sick pay is actually for those employees who get injured at work, and or you are actually on certain, let's say you are on short-term or long-term disability. Like our firm, we buy a long-term disability. So let's say someone had a long-term disability, and we will report that long-term disability to the agency. Then the agency will pay you. But when they pay you, there's two ways of paying you. They can pay you directly, then they will give you a W-2 with a third-party sick pay checkbox. Or they can pay to Community CPA, and then we run that amount to you, and the third-party sick pay checkbox will be there. So those are the use of those boxes. You probably wonder, why are we doing the third-party sick pay box, and what's the benefit? That your income may not be taxable, right? So that's important to classify your income into the right category, so it's not earned income. It is actually a compensation for injury, right? So with that, the box 15, 16, 17, 18, 19, 20, these are all related to the state. So it depends on which state you are in. And you know that sometimes, I don't know, you would be that person, but there are people who receive W-2, they receive 10 of them. The reason they receive 10 of them is because they have one for the federal, then each state they worked, they have W-2 coming out. So it is all the same employer, but because he was deployed everywhere, so he was stationed in every different state for like a month and a half. So he ended up with different state taxes all on one payroll. So if that happened to you, you would see two states, one state. Some states don't have income tax. You see no state, So that bottom piece of the W-2 is state driven. So it's so important to know who runs your W-2 and really work with the payroll people to figure out what the best way to have your W-2 presented. Sometimes, the employee moved. They used to be in Minnesota, they moved to Iowa, and the employer has both locations in their business. So it's really much easier if they can do adjustment before the end of the year. So have you with the state, with the state on the form, right? Just one. So you don't end up paying money to get your tax return done for two separate states. You know how we do federal and the state, or just federal if I'm in Florida and the state that don't have state taxes. But in this case, and if you got two states, you end up doing three taxes, federal, state, and the state. So let's be aware of that. So I think this wraps up the kind of understanding of W-2. I kind of sitting on the employer seat. I also sit on the employee seat, explain to you exactly what's going on here. And folks, I want you to know that the W-2 is one of the most important documents when you go for a loan, when you go for advancement, even when you looking for comparing employee opportunities, and you want to pull out your W-2 from your prior employer and to really compare the benefit. And because a lot of benefit, you only just because you didn't get it doesn't mean you don't have it. And you could be moving out to places and realize that your previous employer are doing a lot more for you. So pulling out your W-2 is actually the best way to see what kind of benefit you have, and before you make that crucial decision. And I know this is a great time for resignation. There's a lot of people doing that. And we also have a lot of people in our firm doing that. And we're just part of the society reflected on what's going on in the economy. But we also have so many good opportunities with our new hires. So we welcome people applying a job at Community CPA because we get tremendous candidates sometimes, and I don't see that is all bad. It is actually a great time to scale companies with the new people coming on board with a new energy and a better skills. Isn't that a good thing? So I want to conclude our webinar by saying that I will see you on Saturday. And this Saturday, I will do the tax update between 2021 and 2022. It's really important to know because you want to live your year for 2022 with all these tax things in mind. At the same time, I want you to close out 2021 knowing that some of those things, benefits are the last time. So make sure you join me on Saturday, 3 p.m. and I will see you again. Bye-bye.